In this video, what I'm going to do is show you how to look up the information that you need to fill out the Excel sheets for Chapter 13, looking at mutual funds. Now remember, what you want to do is fill out the sheet 3 times for 3 different mutual funds. Now you'll go back out to finance.yahoo.com, like what you've done for the stocks. And what you do is in the search bar, just start typing in mutual fund. And you'll see that it'll come up with this mutual fund screener. That's what you want right there. So you click on that. And what it's going to do is it's going to give you an opportunity to put in various things to look for as far as mutual funds are concerned. So you can look for things that are in the different exchanges. And we're going to keep it with NASDAQ right now. You can look at different categories. So in other words, asset allocations, bank loans, commodities, corporate bonds, let's see, European stocks, equity precious metals, things like this. So one of the things you can do is say, okay, I'd like to look for funds that are focused on, let's say, equity precious metals. Okay. So then you could put in, okay, so what company is going to be doing that, looking for different funds, things like that. I'm not going to worry about that right now. I just want to know what are some funds out there, mutual funds, that are focused on equity precious metals. I click on Find Mutual Funds. And then what it does is it will show me all kinds of different funds and what's going on with them. They have your ticker symbol, what's the name of it. You may have heard of Vanguard and Fidelity and things like that in the past. Today, what kind of changes are going on? What kind of percentage change is it as far as their price is concerned? All right. What kind of return have they had over the past 3 months, and what are they doing as far as year to date? And you'll notice everything is real negative right now, and that's because of the coronavirus that's going on. And all of the markets have dropped quite a bit because of the economy basically, in many ways, shutting down. So let's just pick one. Let's say we're looking at gold. I like gold. Okay, so let's see what's going on with this one here, the Invesco, Oppenheimer Gold and Special Minerals Fund. Let's see what that has going on with it here. So what this is doing is it's saying right now it's trading for $17.83 a share. All right. You can see the year-to-date return. That's since January. The expense ratio, in other words, they're charging less than 1% as far as the expenses are concerned. You can see what's happened with the pricing, okay, over the last month. You can see that it went down quite a bit. Things are starting to recover a little bit. Let's see what's happened year to date. See, this is why the year-to-date return is showing a minus 23%, because at the beginning of the year, it was at $20.81 a share. Now it's at $17.66, along with the returns that it's getting and things like that. So remember, mutuals have a bunch of different things that they hold. So let's look at the holdings. For this fund here, the Invesco, Oppenheimer, Gold and Special Minerals, it has all of its money invested in basic minerals and all of it in stocks. So what they do is they buy stocks in all kinds of different basic mineral companies. So you come down here and it talks about what are the top 10 holdings. In other words, what stocks are they holding in this fund? In this case, you can see the companies, Northern Star, Barrick Gold, Evolution Mining, things like this. So what will happen is it will show you what kind of, all the information that you need as far as what this mutual fund has in store. You can see the profile. The profile will give you some background as far as who is the manager and how long has that person been managing that fund, and some background on it. It will give you the style box. In other words, it's focused more on medium-sized companies that are growth. It has the category. It has sales load. So in other words, it has max front-end sales load of 5%. All right. The deferred is basically the back-end load. doesn't show fees. What they do is they make their money on the lows when they're buying and selling and things like that. Now, there's also some expenses that go along with it. So you can see some of the information that goes along with the various fund, and you can find out more about what's actually happening with that fund, what it is that they hold, and things like that. Now, for example, let's look at a couple of funds that I have in my retirement account. Let's see, ABNDX. It's American Funds. It's Bond Fund of America, Class A. You can see that it's right now it's trading at $13.53 a share. All right. You can see that earlier this month it was at $13.77. A year ago it was at $12.79. And so you can see that it has had an increase as far as its value is concerned there. Now the yield is only 2.2%. If you look at the holdings for this, you see it's almost all bonds, some cash, almost all bonds, because it's a bond fund. You can see a majority of the funds that are in there are AAA and then some triple Bs as far as the majority of the bonds that are in there. So that gives you an idea. This is why the return isn't as much, because this is a very safe, conservative type of investment. Another mutual fund that I have, AGPHX, is the American Funds Growth Fund of America, Class A. You can see right now it's at 44.29, okay, 44.24. Year-to-date return, minus 15%. If you look at the year-to-date, you can see that it's dropped as far as the value per share is concerned. The reason for that is because if you look at the holdings, almost all of it is in stock. And you've seen what's happened with the stock market. You can also see the sector weightings. In other words, what sectors are these stocks in? So I have consumer cyclical, financial services, healthcare, communication services, technology is a big one as far as the holdings in this mutual fund. You see, I don't have to choose what the stocks are. I buy this one mutual fund, I get all these different stocks that go along with it. You can see some of the stocks that are owned in there and how much of the ownership, what percentage of it is of the total assets. So you have Facebook, Microsoft, Amazon, Alphabet, which is Google, things like this that are a part of it. Yeah, the stock market has been dropping, and so you're going to get some drops as far as the value of your mutual funds also. The thing is, it's much more balanced. All right, you're not going to lose quite as much. As you can see over the past month, stock market's dropped more than just 1 or 2%. But the value of the fund has not overall. And the reason is because of the balancing in the safety versus return. So those are some of the key things to look for when you're looking up different funds. Again, what you do is you come up here, start with mutual, start typing that, you get that mutual fund search thing, and go looking for different funds. If you have questions, give me a shout.